How's it going, guys? Welcome to the Proving Ground Mastermind. We're going to get started here in just a couple minutes. I'm just going to test to make sure everything's working correctly. Okay. All right. Whoa, that's weird. Check that out. Oh, it's with the strobe effect. That's kind of weird. Mm. All right, well, I'm not going to do that. That's weird. Okay. All right. Hey, thanks, Brad. Appreciate the chat in there. All right, let's get started, guys. Welcome to the Mastermind. We're going to go to get started. If you guys want to just chat in whatever questions you have, feel free. If I don't get to them right away, I'll usually circle back to them throughout the session or at the end. If you don't have time to stay, if we end up going longer, of course, this session as well as all the others are recorded and uploaded to our site at daytradesmart.com, which is likely where you guys are watching. Well, it has to be unless you're watching on YouTube. So it's that's where you'll be able to watch the recording after the session. But again, if you have questions, chat them in. We'll do our best to get to them in a timely fashion. So the last couple of weeks we've been talking about the pressure indicator and some of its baseline foundational type things, right? In pressure indicator, and then we went to TNT indicators and kind of did the same thing. So today we're going to work with major and minor. I know we've done major and minor before, but it just kind of fit in with what we were already doing. I think we've already touched on echo recently, so we're probably not going to go to echo. I'm not a fan of Echo 2. It's not because it's not good or anything, but just by the time it came out, I was already set in my ways with Echo 1 and everything else, and I already had a process, so I never really paid a lot of attention to the Echo 2. That's the only reason I'm not a fan. It's not because of, it doesn't have anything to do with its functionality or its proficiency or anything like that. I'm just not a fan because it just was never of any use to me when it came out, by the time it came out. I know some of you guys love it and you guys do great with it, but I wouldn't be able to do it any kind of service or justice because I don't have any real good insight for the Echo 2. Now, you guys are aware that we have like a call put indicator and a vector indicator. Those are better in on the futures market, not necessarily in the Forex market. So we're not going to talk about those. So mostly what we're going to talk about, especially in the Mastermind, is going to be the TNTs, what we affectionately call the TNTs, TNT plural, TNTs, which is the oranges and blues up top, the majors and minors, and the pressure. We call all three of these the TNTs. Even though this is the TNT indicator, this is major, minor, and this is pressure, when we say the TNTs, we're usually referring to all three of them, the trifecta. All right, so today we're going to work with, again, just major and minor. And we're going to kind of have the same exercise that we had with the TNT indicator and the pressure indicator. We're going to eliminate those other indicators and candlesticks, and we're going to look at just the major and minor, which is really difficult because major and minor are really nuanced, and they work differently when there's volume volatility in the market, right? When those banks are open, sometimes you'll notice that the minors will bully the majors in times where it's kind of off time hours, and then once larger markets start to open up again, you'll notice the majors start to kick back in and really start to take over. Did you see the half top on 531 Euro USD 2200? Let's take a look at it real quick. Euro USD half top. I think we're on a flat top right now for the Euro USD. It hasn't alerted yet because we're not at 45 minutes into the hour. But let's look at this half top, 531. So that's going to be like 5 days ago. Is that what you're talking about, Brad? So let's go back here. Okay, so here's 531. And you said it was 2200. So I'm just going to go all the way through 531 here. Let's go to 22 where you said it was. There it is right there. So there's your half top. So negative 50 flat. It's red. So because it's red, we'd go green. We'd go long. And what are we calling a half top, Tim? Are we saying 3 or 5? 3 pip. So 3 pip half top. That one's tough, just kind of at a glance, only because we can see that we have major minor crossed down and we have green just popped on bottom, but we're only looking for a 3 pip retrace out of 12 pips. It's only 25% retrace on that candle, which is totally doable. All right, but let's see what happens. So 1.9, we get 7.1 to the short side as that fell through. And then there's 3.5, not enough to get out of it there. Here's 9 pips. That one 3.7, still not enough there. We did get that green candle, but it just didn't give us enough push up, right? 15.9 would have been the stopper. So that actually would not have worked out. This one would have been close, but no cigar. It would have just taken us out right there. And when you're back testing, you'll notice that. A lot of times, if you're not going to get it right away and you don't have any other indications saying you're going to get it, you may want to consider an exit method pretty quickly on that half top, just as a pro tip. But yeah, awesome. Thanks for pointing that one out, Brad. And as we can see, they don't always work out, right? And that's all right. Okay, so let's peel some of this stuff back. Actually, let me see if I can. Yeah, I'll use this one. So we're going to look at it a couple ways. I want to be able to use these support and resistance levels. So I just went back and drew in some lines. This is an uptrend because it just kind of took too long to kind of do that on the fly last time, so I just prepped it beforehand. I don't always like prepping it just because then it just seems set up, right? I want to just pull it out of nowhere and then run with it. But let's go and peel back the pressure, and then we're going to take off the candlesticks themselves as well. Okay, so right here we have just major and minor, and what we're going to do is we're going to look at its base. It's really baseline. It's foundational movement. Now, the cool thing about major and minor is that it's a lot of its nuance is very baseline foundational as well, right? So it's not just like reactive. In other words, if it's crossed and pointed down, that doesn't always mean we're going to sell, but that's not the only way we use it. In other words, it's not just when it's pointed in that direction that we trade it. There's a lot of ways to use it to position even if you see that you've got soft movement in one direction or strong movement in one direction, you know, and then waiting for some of those technical levels to catch a bounce and then go the opposite direction for a much larger trade, or even just a quick, you know, in and out if that's what suits you. Okay, so what we're going to do is we're going to look at it first. We're just going to take it as it comes. So right here, we can see that we have major, minor, overbought. Now, generally when they're overbought, we'll want to see some type of cross or something pointed down to use them reactively, right? So then that tells us, okay, we're overbought. Now we want to see some type of agreement overbought so we can use them reactively and sell the market, right? So right there is where we would justify taking a sell. So I'm going to use 2 lines here. I'm going to have a buy and let's change this to red and a sell line. And say that's TC2, yes, okay. Okay, so we have a red, and then we have, let's make this black line a green line. Okay, so erase that. All right, so we're going to go through and we're just going to line some of these out. We're going to make, you know, some marks where we would potentially have taken a trade, and then go back and check it after the fact. Now, when we go back and check it, we'll use this other chart because I want to show you guys some support and resistance, you know, how we can use that, and then the trend and how we can use that in our favor. And obviously, when I use major and minor, I'm using other indicators, especially pressure. So, you know, it helps out immensely. I'm not going to try to make this too complicated. I'm going to try to keep it as simple as possible. So there may be things that you guys see that you guys are like, well, actually, we would, you know, probably do this because you guys are a little more versed in major and minor. But just consider that we have a very diverse group, right? Everybody that's here today may not be as proficient with the indicators as some of you guys that have been around for a while, and may not know some of the patterns that that some of you guys are familiar with. So I'm going to try to keep it simple, but there are some that if we run into them, we'll kind of point them out. We won't spend too much time on them, but we'll point them out. Okay, so here, pretty simple, reactive. We would try to take a short, right? Because we've got green below red, gray below black, and they're overbought, crossed to head to the short side, right? The only reason we would consider even this soft cross, just as a cliff note here, hey Paul, is just because of how long we've been overbought. And after we kind of went overbought, miners kind of decided they were going to try to sell off, and were not successful, and then had to recommit to the long. Played kind of this back and forth, almost a hydra right there. Whoa, too far. Almost kind of hydra right there. And then here we get the cross. So we've hung out here pretty often, or pretty long. Now we're going to be looking to short. So we'll mark that red, and we'll continue forward. Here we've got more commitment. Let's just call that the follow-up to that short, and we'll kind of disregard that for a second. Now, if this is where we started, the indication would still be short, right? Mainly because minors haven't really outrun majors very much, and they're following alongside each other down, which means it's not going to be a very strong, aggressive move short. Nonetheless, it's going to be a short move, right? Now, strong and aggressive is not referring to the amount of pips that it moves. It's more referring to the amount that it moves, it retraces as it compares to the amount that it went up, right? So if it moved up, if right now it moved down 50 pips, that's a lot of pips, right? But if it had just previously moved up 150 pips, well, it's relatively soft compared to the move up, right? And generally, if it moved up 150 pips, say in 2 candles, generally a soft move is going to move down even that 50 pips in double or even triple that amount. So 2 candles for 150 pips, and then it would be like 4 to 6 candles down for 50 pips, right? So just keep that in mind. All right, so here we're just going to call it the follow-up to this red one. So now we're kind of seeing something a little different, and we're not going to pay too much attention here, just because this is really nuanced, and a lot of times you need some more of that validation with other indicators, or even trend and what have you. So we're going to look at this one in a moment when we go back, but for right now, I just kind of want to point out that now we kind of have the minors that have outrun majors. Now majors are committed because they're down, and they haven't really, decided what they're going to do quite yet. We can see that there's likely to be some retrace, but again, this is something that you would take with other indicators. So we're not going to elaborate on that too much just yet. How does the gap between the majors and minors? How much of a gap helps us understand the strength of the move? So the gap is going to be relative to the trend. So if there's separation in major and minor, sometimes it's, and let's say we're in an uptrend and they're pointed up, you're still going to get a stronger move in that direction just because the trend is up, and so the minors are usually pulling up. A lot of times when you get something like that, it's because the majors are asleep, right? The banks aren't open, and so those soft moves will still carry in that direction because the minors are kind of pushing their weight around, and the trend is in their favor. The separation when you're against the trend or not in a favorable direction, you're up against support or something, say against the trend short, the separation is a lot of times just indicative of retracement. All it's doing is retracing the previous move, so you'll want to pick your entry for a long trade, right? Go the opposite direction. And the gap, the larger the gap, the more likely and the more abrupt you're going to see a pullback, right? So let's go back really quickly and I'll show you, try to find an example. So let's go to, because sometimes they're like blatant, and I'll show you what I mean here. Let's see that one. So that one actually came back, so the majors followed through. So again, with pressure, you're going to get a different result, right? We know that it's an uptrend because that's what we talked about when we first started this session. So that separation, even though minors are gray daggered, right? And we likely could have seen some down there. So let's put this on here. Majors still followed through, so we could still have seen some down. We didn't see very significant down, honestly. It was only about 1.1 pips. From that point, still 0. And then actually continuation up, right? 15.7, 1.2 the short side. A lot of times, even something like that, I would expect a pullback, and we didn't get it there. So I'm not sure if that was because of something to do with announcements or anything else. I'm not going to check it right now, but let me give you a better example, because that's just a lot of separation between major and minor. A lot of times when we see that, we're going to get a pullback, and it looks usually like, I want to just have a really obvious, blatant example. So here's one where you got majors way up here, minors already committed to the channel, and then they've got to kind of come back to meet majors, right? Then once they do that, it's fair game. But even some of these downslopes, so look, let's follow this here for a second. I'm going to add. So the separation between major and minor is relevant, right? But watch what happens. So the trend is up. We've already identified that. But so everything short is going to be short-lived, right? So minors pull down, not a lot of movement in the market as majors remain up. And then as minors come back to meet majors, we move a little more aggressively up. We're sideways, probably soft, after hours trading. And then right here, majors commit to minors. Look at how much they fell, only to retrace that consolidation, right? But we know there's a little more commitment there, right? And there's some follow through. Now again, it's soft, right? It was soft to begin with. They were separated. And the reason why we say soft is, again, look at this. We went 2 candles, right? From when we started pointed down, right here, right? And look at this one move up, 17 point. So from the start to the highest is 17.7, and from the start to the lowest here is 10.2 for 2 candles, and that was just 1 candle, right? So again, it's not a measurement of pips. It's more how it compares to the move in the opposite direction. And then as the trend starts to kick back, and you can see we get a little stronger movement to the long side. But you can see a lot of times that major separation is cause for pullback, right? So here, even here, we have separation, but more commitment on the majors than what we saw before. And so we had some follow through there, but there's still separation, right? So look at this, from down here up, right? And then now these last 2 candles barely brought us back to kind of, maybe a few pips off of, that high right there, about 3 pips off of that high. And then we retrace this whole little consolidation right here. But look at this up compared to this down. So this red candle, that red candle, and this shadow represent the down, the soft down, compared to this up, right? So 18.8, and then 13.1, and then after it kind of pulled back down, hit that support, bounce back up, right? So you're not going to see the same thing happen when the majors and minors are oversold and minors pull away from majors in an uptrend. You're likely to see more follow through and the majors kind of oblige. Usually it's going to happen when the volume is lower in the market, right? Because the minors are going to be a little more aggressive. So like right here, minors pulled away from majors. Majors did commit. Minors are still leading the pack. There's separation. So you expect soft, right, except for that it's with the trend. And so as a result, majors and minors kind of keep up with each other. You're going to expect to see some pullback, but ultimately you're still going to get the long. Okay, so let's go back to where we were. But that's why, like, four ways, and it doesn't matter if it's with the trend or against the trend. That's why four ways and stuff like that are effective, because they're showing you that soft movement, that lack of commitment, at least at that point. And so even if it's against the trend, a lot of times those four ways are still going to work out. Because all we're wanting is 5 pips. We don't need an absolute reversal. All we need is that 5 pips. So the market's going to move 6 or 7, maybe even 10 pips in our favor, give us our trade, and then continue doing what it was already doing. When it's with the trend, we see a much more aggressive reaction in terms of like a four-way or whiplash or, you know, whatever it may be. Against the trend, whiplashes are awesome, because against the trend, you take your initial down and then you know, okay, that's it. This is the end of that direction. Now we're going to start going the opposite direction. And so even though it's a 5 down and 5 up on the following, a lot of times our members are picking up, you know, our subscribers are picking up more than just that next 5, right? So you're getting that initial 5, and then the following 5 is usually working out to be much more than just 5, right? You can see that there's a lot more room there for you to take profit, and the majors and minors will usually oblige in that direction pretty aggressively, and you're usually catching the beginning of that move as it starts to switch and go the opposite direction. All right, so right there we said sell. There's our follow through to the sell. Right here, again, this is more nuanced, so we're going to leave that alone just for a second. Now right here, who knows what this looks like, what this could potentially be. I mean, it probably is. If we really want to be technical, well, that's going to spread it out, so it's not. But right there, red is passed all the way through black, green is passed through gray and black, so, and minors are pointed up. We have this separation right here. Yep, you got it, Brad, bootleg, right? So we're not going to spend a lot of time on that again, because some of our new folks might not know what a bootleg is. Now, this would be a bootleg short. We've got our cross, right, and majors are pointed down, so that's our bootleg short. Now that's very nuanced, so we're not going to play with that one, but it's just something to point out, right? Now we're oversold. Now we've identified that we're in an uptrend and we're oversold, right? So a lot of times it's in these situations that we're looking for our next level of support or resistance, or we are considering taking a longer term to the buy side, right? With some pretty, you know, tight stops. Because like anything, trends change, and so you don't want to find yourself in a situation where this just so happens to be where the trend changes. Now, if we were only looking at major and minor, then we would want to use support and resistance a lot more aggressively. Now, if on a 60-minute. Now, if we had major and minor plus a 240 and a 1-day, and the 240 and 1-day were still telling us that there's some buy room, and we have this going on, this is going to hold very little weight, right? Whereas if we were in a downtrend and we had this going on, this is going to hold a lot more weight. Majors and minors are together, even though they're oversold. What's not likely to happen with the trend is that all of a sudden majors just jack up and start pointing up, and minors start pointing up. Against the trend, that's likely to happen. With the trend, it's not. Generally, what will happen with the trend is that these lines will come down, minors will kind of start to soften out, plateau, usually hiccup or something. Majors may have a little bend to them. And then minors, and they'll kind of play around there a little bit. Minors will either straighten out and strengthen that very next candle, or try to start to cross and point up. And that'll soften the movement for momentarily, and if they hang on to that movement for too long, majors capitalize on it because minors have picked the opposite direction. Majors will then strengthen the short, causing for the minors to have to break their backs and go short, which oversells, and then you can start getting the pop back to the long side. Now, or retracement. But here, where we're already against the trend, a lot of times what will happen is minor softening and then usually some reversal, right? So we're looking for levels of support and resistance when we see something like this against the trend to try to take something in the opposite direction. So let's just mark this with a pink line because we want to see what happens here. So we can reflect on it, and then maybe we will be fortunate enough to see something like that pointing up, so we can see how it differentiates. Okay. So right there, minors hiccup, majors push down, and then we get across almost a head fake. Right, minors aren't all the way through the channel, but almost get that head fake here. If we're waiting, this is what we're waiting for, right? Because we're with the trend. If we're using these reactively, this is what we're waiting for to buy, right? Oops, TC1, erase. That's what we'd be waiting for to buy. Because now we're oversold, uptrend, minors are crossed up, majors are crossed up. That's what we'd be waiting for to go ahead and go long. Minors are kind of outrunning majors a little bit here. And so again, with the trend, we're going to take this a little more seriously than we would against the trend. And so when we go back and review some of these lines, we'll look at that as it compares to this. Against the trend, separated, and with the trend, separated, right? Okay, now we've got kind of, what would you guys call this right here? Actually, let me mark, yeah, we'll call that the follow through to this green line. What would you guys call that right there? Anyone? We've got separation, oversold to overbought, no overlap, and then intersection overbought. You got it. Four-way. Brad, you are on it, my man. Four-way. So in these situations, we're not going to use these directionally, but it is against the trend, so we want to be cautious. Generally, if we're going to see something like this against the trend, we're going to use a 5-minute to position. But what this means is we could get a 5-pip reversal to the short side. So we're going to mark this red. And again, it's for the kind of the same reason we talked about before. We had a soft move up. Now, it is with the trend, so we know that we could still get some movement up. And we're still likely to get overall movement up, which is why we want to be more cognizant and careful when we execute on something like this. However, when we backtested these, they backtested as is, regardless of trend, so on and so forth. And so you're still likely to get a 5-to-1 trade here, meaning you're going to get a 5-pip fill before a 25-pip stop. It may not be a pleasant trade, but a win is a win. Whereas if you position, you may have a better result. Okay, so we're not trading this directionally, because even if we were, well, we would favor the majors first of all, which would mean long, because the minors are sideways. But we would use this based on the education that we already have that tells us when we see this 90+% of the time, we get at least 5 pips before it goes 25 pips against us. So we're going to bank on that. Again, using support and resistance, trend, positioning, shorter term charts, all that stuff is going to benefit you and make the trade a lot more comfortable, but is not necessary with a pattern, right? Now, that's why this is a pattern, because a lot of times it's going to show you either you can short, or if you intend to continue long, then you may want to hold out for the short to happen, position with the short, and then go long. And sometimes you miss your position in trying to do that as well. So we're not looking at that as directionally. Here, so it's not the example we're looking for, because here on this pink line, we had just arrived oversold, and then miners kind of softened out. Here, we've been overbought, and miners already softened. So this, we were not overbought. Otherwise, it would be the example that we were looking for. We make a blue or a pink dotted line. So we're not going to focus on that. Now we're overbought. Majors and minors are pointed up. We know there's going to be some give back. If we haven't already gotten our four-way, we know we're still likely to see some. And so if we're continuing to buy, or we just entered a buy position, we may want to be cognizant of the fact that we could get some drawdown. Nonetheless, if we're, if the strength is still to the long side, especially with longer-term charts, just hang on to it and sit tight while the drawdown happens. But we're probably not putting a lot of focus on right away entering long right here, right? We're using our shorter term chart to pick a direction or a position, waiting for it to soften even momentarily before we enter. Now, if we did enter just right off the bat here, then we know that we're likely to sit in that for a little bit as it cycles, right? Cycles back down and then comes back up. And sometimes it's going to be 1 to 3 candles, and sometimes more, just depending on the market conditions. So we're not going to mark anything there. We're just going to leave that. Now we've got minors cross down, majors up. So this is, again, is showing us a lot of good continuation to the long side. Still nuanced and still overbought, so we're going to leave it alone for a second because it's not as obvious. And then there's where minors have to come back and meet majors. Still overbought, so we're going to leave that alone for a second. Right here, we've got double cross, overbought. So if we're using these directionally, like we talked about, reactively, then we'd be looking for a sell right there, right? Because major, minor are crossed and they're overbought. Now, in the classic example, the classic pattern, we would wait for these to both cross simultaneously. So no cross, and gray and black are not crossed down. They're crossed up, but not down. So we want both of these to cross simultaneously down while residing overbought. Now, here's one thing that used to trip me up. If these cross from here down, what if they end up in the channel? Does that mean that they're not overbought anymore? No, they started overbought. If they cross and extend into the channel, that's good. But they have to start overbought. It doesn't matter where the tips of them are in the case of a cross, as long as they started overbought. And you can see they're clearly overbought, right? So now we want them to cross down simultaneously. When they cross down, green goes below red, right? And gray goes below black. If they're crossing up, green is above red and gray is above black. So right there we get a double cross. Gray below black, green below red. The only thing in a classic would be missing for an 86% win rate would be pressure. If pressure green was short-term bias to the short side, then that's good for 3 pips. Better with trend than without trend, but to each their own. We're going to mark that because that's what we're looking at. It's baseline foundation, right? Okay. We'll call that the follow-through, and then here's a pullback. So right here, well, we didn't get in the channel, but let's look at this. We haven't really extended all the way overbought. We kind of came from the oversold. We're continuing overbought. I'm going to mark this green, okay? But let's put a square on it because we are overbought. Ideally, we want to come from, and we never left the overbought, right? Majors are still, the red is still overbought. Now, if green, red, gray, and black were in here in the channel, right? Not oversold, not overbought, but in the channel, and then turned around and ended right here, that's likely going to give us more room to the long side, even momentarily before it gives back, kind of plays them back and forth, and then recommits to the long side. So again, in situations like this, we're looking for our next level of resistance to play into, our immediate next level of resistance. We're probably not trying to take too much out of that quite yet. And it could continue, just depending on the market condition. But it's likely that we're going to, it's not just going to happen all at once, right? And so we want to be cognizant of that. Okay, so there's some pullback right there. This would be red, right? Again, double cross the short side. Green below red, gray below black, crossed and pointed down. You see how some of these, and you guys will realize why I point out some of these things, some of these nuances here. Majors and minors were not in the channel. If they were, we probably wouldn't have seen this happen, by the way. It's not likely that that happens, right? Especially with the trend. It's likely against the trend, but not necessarily with the trend. In the example here, is we had just arrived oversold straight lines. Before that, we were in the channel, bootlegged, and then we arrived oversold against the trend. Okay. Here, had we done that right here, where if we came even into the channel, which we didn't, and then turned around and came up like this from the channel, then we're likely to see continuation. Otherwise, and you guys have heard me talk about kind of this M pattern before. That's what a lot of times you'll start to see before you see the continuation to the long. We're not going to talk about that because that's really nuanced, and I haven't even figured out the best way to explain that one. Okay, so here's the double cross overbought pointed down, so we're going to mark that one. Okay. And again, kind of the same thing that happened back here happened here again, right? Still not a lot of commitment to the short side, so more sideways, right? But the up pressure is still kind of winning the fight here. We're not going to mark anything there. Continue forward. Again, we didn't start in the channel, and now we're pointed up. We did not start in the channel, but I'm going to mark it because we've got room, right? Green above red, gray above black. We are overbought, but it's obvious that we're not maxed out overbought, right? Look at compare it to what you're seeing here. Kind of touching this black barrier right here. Major, minor both pointed up, and we're kind of maxed out, right? Where here we're not as maxed out, right? We've kind of digressed a little bit, and now we're still kind of pointed up. The lines aren't bent. So they're still straight and committed, even though it turns back around right here. And then here it looks like we're committed really well. And then all just to kind of soften out, do nothing there. And then again, soft or stronger commitment at long, no bends at the ends of these lines. And so we're going to mark that green. But again, it didn't start in the channel, so we want to be cognizant of that. Is the point continuation is more likely if they don't get into the channel before reversing? No, the point is that if they do get into the channel and continue and then flip around, there's more likely continuation than if they do not get into the channel. You're going to get continuation eventually, but we're looking candle to candle, right? So overall, are we going to move up in an uptrend if, especially if we're positioning correctly? Yeah, we are overall. But the idea is that we don't want to draw down very much. We don't want to sit in a trade very long. And those are the things that I want to try to help you guys out with while we're kind of working this exercise out. And some of these small clues will cause for us to have to search for other forms of validation. And sometimes those validations will tell you, yeah, you're fine, continue. And other times they'll tell you, you know what, be cautious here. And when they're telling you to be cautious and all your analysis and all of your experience and all your education is telling you be cautious, then you should probably be cautious. And sometimes it's going to mean that you're going to miss a trade. But is it really missing? Because missing, quote unquote, missing a trade is not really representative of what of success or failure. If you missed 8 out of 10 of those situations, then you want to start second guessing what you're looking at, right? And that's why it's important to journal, because then otherwise it's like if you missed 2 out of 5, you'd be like, well, the last couple times I missed that, so I'm going to go for it this time. Not even thinking about, well, 5 times I was right. It's just the way your brain works, right? Or 5 out of 15. If there was 15 different examples of where it wouldn't have worked out, but the last 5 happened in the last 3 months, then you'd be like, you know what, this is affecting my ability to win, when that's not true at all. You actually benefited from not taking that trade. So, but you don't realize that because our hindsight doesn't work. Our hindsight's 20/20 to the last trade. It's only 20/20 if you can remember the last 15. Otherwise, that's how a journal helps, because you can look back and you can say, you know what, I ran into this situation before. And if you're always reviewing your journal, then you know exactly where to look. Eventually, you start categorizing, you're making little stars and notes and stuff like that. It becomes this whole system, but it's invaluable, right? And you're able to use it to your advantage. Okay. So right here, we don't necessarily have a cross on the minors, a little bit on the majors, but it's a soft cross. We're going to skip that, not really do anything with that quite yet. Okay, now we've got a little more commitment. So again, if we're using them directionally against the trend still, then we want to put a little more weight on something like that, because we're overbought and we have commitment. Okay, more commitment there. We'll just call that the follow-up to this initial down. So if we're looking for a buy, we're going to start looking pretty close as soon as, depending on what this candle did. A lot of times you have a shadow, and these would have been oversold, and then it pulls back. But a lot of times you're like, okay, we're in a buy trend, so this could be a good opportunity to enter, right? Otherwise, again, and sometimes you'll miss by waiting, but otherwise it's like, okay, well, if I'm on an uptrend and I find myself somewhere in this sequence, then it's probably better to wait out the short and then position for a long. Or if I can scalp the short, try to scalp it as conservatively as possible. But ultimately, this sucker is going to go to the long side based on X, Y, and Z, right? So there's other disciplines that you need to utilize. Again, here we're using them directionally, so we're saying overbought, double cross short, we're going to sell. It's not clear how much, because this very pattern right here could be 30 pips in high volume time and 3 pips in low volume time. So this in and of itself tells you nothing as it pertains to the strength in the move, right? Which is why we like pressure, because pressure tells us there's going to be more strength in that direction. Now, if we're looking at it from a pattern perspective, then it would be closer to a classic. It would not be a classic because the majors already crossed, and then the minors crossed. They have to cross simultaneously, and then post with pressure short-term bias in your favor. So again, directionally and disregarding some of the more heavier nuance, all we want is overbought and then crossed down. And so they are crossed down, so put a little more weight there. And they're together, which helps, right? And they're still together here, but that we'll call it to follow up to the previous. And then we get a turnaround. So again, like we talked about way back when we first made that pink line, is these didn't arrive oversold, nor did they have to, but a lot of times it's not against the trend. It's not uncommon for these just to flip back around and start crossing up, where with the trend, that is very unnatural for the major or minor to do. With the trend, they're going to follow through, become oversold if it's a sell trend, and then minors are going to kind of play their sideways game. Majors are going to play their softening game and try to get minors to kind of cross up, because that's where they play the minors the most, is oversold and overbought. That's why I like taking my trades in those ranges, and people are like, wait, why are you taking a trade there? They're pointed up. Why are you taking a down trade? Or they're starting to point down. Why are you taking an up trade? And it's because that's where the majors outplay the minors, because the minors think we're oversold. It's time to buy, right? Because they hear all this rhetoric, right? On this one, Brad, I just kind of looked at and it was pretty obvious. I picked a place where the trend was really obvious. I mean, it's moved up like for a few days, maybe even more, and it's an obvious uptrend. Now, the majors are very clever in giving us misinformation, right? They'll make us feel stupid for not thinking the way they do. A friend shared a book with me one time, and he says, oh, check out this book. I think it's funny. And I thought it was funny, and it's like Day Trading for Dummies, right? And it was 2 pages. On the first page, it said buy on support, and on the second page, it said sell on resistance. right? That simple. Now, if it was that simple, we'd all win, right? And it wouldn't be as appealing because there wouldn't be a lot of money in it. There's not a lot of if it's simple and it's easy and anybody can do it, there's not a lot of money involved. If you have to be educated in order to do it, and it's not just anyone but the people that are willing to be educated and stick to the rules, those are the types of things that are worth doing, right? I mean, I could probably spend 10 minutes with you and teach you how to skip a stone over water. It's pretty cool, especially when you teach it to a 4-year-old, but you're not going to get paid to do it. Okay, so let's continue here. And we'll do a couple more, and then we'll go back and kind of try to review a little bit. All right, so we got a cross in the channel, pointed up. I'm going to mark this because this is directional. That's a soft cross, and we got to be careful with these, but it is with the trend, so we're going to mark it green. Majors kind of flipped out minors, so we'll have to see what happened there. Technically, it would be considered a bootleg, by the way. There's not a lot of separation there. Minors are up, majors are down. Technically, it would be considered a bootleg. But let's just disregard that for a second. Okay. Here's another directional. The only reason we wouldn't call this a head fake is because we've already touched the channel here. There is separation there, but again, it is with the trend, so keep that in mind. I'm going to mark that one green as well. And look at that pull back. So it worked like it would with a head fake, right? I mean, we don't have any of the pressure or contrary candle, but it worked like it would with a head fake. And now here is another nuance, right? Why is this a nuance? Because even though we would not have called that a head fake, it acted like a head fake would. And so this becomes a valid follow-up to the head fake, right? Because in a head fake, the majors fake out the minors, pull the market down, minors oblige, and now they're both oversold and pointed down. And we know that 60-70% of the time, the market will still short a little bit on the next candle, but 90+% of the time, we're going to go long for at least 3 pips. So right here, I'm going to make a mark for buy, even though these are pointed down, because that's a really basic nuance. It's not because they're pointed down, it's because what happened prior to them pointing down. Okay, so let's keep on going here. Not crossed yet. There's a little more cross. Now majors already crossed, minors didn't, but now they're both crossed oversold. So I'm going to mark that for a buy as well. Majors crossed, minors kind of sideways, majors crossed down. So let's wait for that. Technically another bootleg, mark that for a buy. And then we'll see where these go from there. Okay, so let's go back and look at what we have thus far. And then as we're looking and we get to this area, we'll start going forward, looking at other analysis. So let's go back here. And we're going to use so we have some support and resistance right here. And we can see this first line that we created was reactive, right? So to clarify, when I picked out an area where the trend was obvious, I mean, it's pretty obvious, right? So we have like this nice push up. If we go back even further, we had some consolidation, but it's been up, right? So it's pretty obvious. And that's why I picked that level, just so we can say, okay, we're in an uptrend or in a downtrend, whatever, and it was obvious. Okay, so right here, double cross, we're on resistance. So if we look at our levels of support and resistance, I had to go back to pick up those levels of resistance. But we're on a level of resistance, and we got this double cross. So we'd be looking for a sell against the trend. There's about 13 pips. So let's just call it, 13 pips. So it's going to be, what is that, like 3, if we're going to be technical, it's like 3.25 pips of profit. but we're not going to say 3.25. We'll just say 3, right, to the short side against the trend. We're only taking 25% of the distance between our current market price and our support level on this particular signal, right? So right there, we possibly drew down 3.4. We took profit, and then here's the follow through, and we hit support. After we hit support, we bounce, and that's what kind of caused that softening, right? Because we're still in an uptrend, and then continued up for a little bit, and then bootlegged after the pullback on resistance to support. We only have about 9 pips against the trend. We wouldn't take the trade, even though, I mean, if we're pattern basing it, then we could at least take the 3 or 5 or whatever we justify for the bootleg. I can't remember which it is right now, but we would take that and justify the trade because it's a systematic trade, right? We have a stop in mind and we have a destination in mind based on just the pattern. So that's our strategy with the pattern. It's always best to use it with other disciplines, but if we can see cause that we're going to short and not necessarily room to short, we could choose to be discretionary about it and let one supersede the other. If we have reason to believe that we're still going to get some short and be able to get that trade, then we're good, right? We don't want to just say, well, the pattern's there, forget everything else, and let's just take the pattern. So a lot of times, if everything else is contrary-wise, it's best to just kind of sit that out, right? In this case, it would have been just fine. Drawdown 8.7, and that went 27.7 all the way down to the next level of support. Now again, it's relative because this down move, right, like we were talking about before, it's relative because the up move yielded quite a bit, right? And then this is like a retrace. And look at this down as it compares to this up. So the strength is still in the up, even though we had this strong down. Again, it has nothing to do with pips because from top to bottom, that moved 36.5 pips. But it has everything to do with how relevant that is to the move up. Okay, so right here, we just arrived oversold and we made it pink. We made it pink because it's against the trend, right? Now, we said that when stuff like this happens, it's not uncommon for this to just reverse. And we actually saw an example of that, and we'll get to that here in just a moment. Against the trend. It's not uncommon. Now, it doesn't mean it's going to happen. It just means it's not uncommon. And so if we're looking to go long, right, then the place that we'd be looking to go long after this is here or another touch on support, if we trust our support, right? So while we're doing that, we could look at a 5-minute and wait for the 5-minute to get oversold, and in that process get somewhere closer to that line before we enter. Because what if it doesn't go all the way to that line? Maybe it goes just before that line. It's already touched the line, so it doesn't have to touch it again. Just before the line, turn around and start going up, right? So we want a pinpoint entry. We could try to use the 5 minutes so we don't miss our entry, right? And wait for the 5 minute to be oversold. Wherever the 5 minutes oversold, then we'd take the trade long. Otherwise, we'd be looking for a touch on that level again. And because we're not putting a lot of stock on in this continuing short. Now, a lot of times it still will, right? But again, we're using the education that we have, we're using the disciplines that we've learned, and we're executing because that's what we know. And we also know that we're not always right. But if we put everything that we have in our repertoire to our advantage, then it helps us to be right more often than not. But we're never going to always be right. No matter how perfect it looks, it's not going to always be right. Okay, so a couple of options. Wait for the support to go long. Wait for a 5 minute to oversell. We're not going to pull up the 5 minute. Wait for the 5 minute to oversell. If it's already oversold, or you're comfortable with drawing down potentially 6 to 10 pips, excellent. Just get in right there. So you could get in here. You can get in at another touch here. Or if you were using the 5 minutes, just wait for the 5 minute oversell, because you're not looking at this as a serious sell. you're looking at this as gassed out and ready to flip. Now you just got to decide where the flip's going to happen. Now, as it touches this line again, wait for the 5 minutes to cycle, whatever it may be. Let's go forward. So it pulled up first, 10.4 pips. So if you're going for 10 pips, you missed, right? Although you wouldn't be. You'd only be going for 5 pips because it's to the next level of resistance, and you have 10 pips from the end of that candle to resistance. So with the trend is only 5 pips. Now, if you're banking on more, then you're upside down on the trade. Let's just say we're going to go to a new high of like, somewhere above here. You're just going to try to, trail it as it continues up. And you're expecting, your stop to be, say, 25 pips away. So here, again, we're oversold. We did have a run up, kind of pulled back a little bit. We haven't touched that support. So for those of you that were waiting for support, we haven't gotten there yet. Now, as we get there, maybe you have a pending trade, or you're going to just enter discretionarily, or you're waiting for the 5 minute, whatever it may be. But we haven't gotten there yet. So let's go to the next candle. We never get there, right? Again, we didn't have to because we already touched with this candle. So we got close. Maybe the 5 minute was oversold there, whatever it may be. And then from there, moved up 14.6. So if you are going, let's say you were going for a longer trade, well, you drew down about 5.1. You're now in a profit 6.2, bounced at 10.7 on resistance. If you're going for 10 pips, you still are not out of 10 pips. If you're going for a new high or, outside of these levels as you're, swing trading it, then obviously you're profitable now. You haven't gone upside down very much and you're still in that trade. All right, so right here we have, here we could say, okay, are we deciding to stay in this, or should we just take our profit and run, right? Here, maybe you already got out, or you're asking yourself the same question. Here you're saying, okay, now we've got a double cross pointed up with the trend, and that's a little more encouraging. If we go back here, no crosses, no, we got simultaneous crosses. This is more of like a head fake scenario, but it's not a head fake, right? Well, first of all, we can't validate it's a head fake because we don't have pressure. We do have a contrary candle. We do have miners that almost entered all the way into the channel. Matter of fact, when that wick happened, I bet miners were all the way into the channel. Majors are hung back, and so we wouldn't be looking at that as a buy opportunity, but looking at it discretionarily or in terms of reactively, then we would be looking at that as a potential buy. Otherwise, for Mastermind members, we're actually looking at that potentially selling still. There's a follow-up to the buy, right? We didn't have a head fake. It did carry through with the trend, so the trend definitely helped out there. It only went 1.5 short. Those of you guys that are in here went 23.5 and are 18.7. Those that were holding for the bottom were not in. They missed the move. Those that entered after at this point are now 27.5 and 22.6 profitable. Still waiting for the high or out or whatever it may be. Got some follow through there, so we'll hang on to that for a moment. Catching resistance here. Did pull back a little bit, but you're already profitable, right? Okay, right here we had does trend trump contrary pressure signals? So if I am, let me see if I understand your question correctly, Brad. If I'm in a buy trend and I have, it's 10:57. Let's see about this flat top real quick, guys. Let's see. So majors and minors are kind of straight. I'm not a big fan of that, but we got a nice flat. Let's go to, where is it? Oh, US top. Euro USD. So 62, I have 48, so 0.62. And we've got 2 minutes. let's see. Minute. It's the positioning we want for sure. We still got the flat. We're overbought. We've got some straight lines. Would be nice if 5 would run up a little bit. We got a minute and 11, which is going to bring us to the end of the 5. I don't think we're going to get much there. So let's wait. Minute and 2. Bounced on resistance. 54 seconds. 5 minutes eating us up a little bit. I already moved 5.1 in that 5 minutes. You're already out? Tim jumped in early. He's like, I'm out. He already saw the 5 minutes. He's like, yep, that's going to come back. Oh, you took 5? Nice. Yeah, so he took that. He's the one that told me flat top. Like, all right. He's like, yeah, I'm out. So he saw the 5. The 5 was going to pull back. For those of you guys that aren't as proficient with positioning and things like that, don't try to do that kind of stuff unless you've practiced it. If you're in a practice account, sure, have at it. Otherwise, probably don't want to try to do that kind of fancy stuff quite yet. Doesn't mean that one day you won't be able to, but right now, let's just take it one step at a time. All right, so a little more commitment there. That gave us some nice positioning. 3 seconds to go. Let's go ahead and sell on that one. And so I got in about 3 seconds before the post on green chart, which is about 7 seconds after the post on MetaTrader 4, because I have a 10-second delay. And if you guys have a 1 minute delay, you probably don't want to try to take the patterns that we take, because it might jam you up a little bit. Let me put this to a 3-pip take profit. And we'll put a 15-pip stop. So that should be 15 and 3. So that's perfect. Okay. So we'll leave that. And we'll come back here and look at some of the, go back to what we were looking at. Okay. So we identified this as a 4-way as we were back testing, and we can see that we're on resistance. We know that we're against the trend for our short. Again, we could try to position with a 5 minute, so same thing as before, right? Because we would try to buy ourselves as much room as possible. Do we have room to take 5? Yes, we do. From this point, we have enough room to try to take 5 pips short because we have 11.8. Actually, against the trend, that's not true. We wouldn't. So again, if we use discretion, we could say, all right, discretionarily, is there anything else that tells us that we could potentially get a 5-pip short here? And the answer is yes, we have resistance. Is there anything that would stop us from doing that? Again, the answer is yes. We're in an uptrend, and we've just reversed from a down push, right? So we had an up, a down, an up, a down, and the down was not lower than the previous down, and now we have an up, and we have yet to create a high. And so we're still waiting for a high, and we haven't made it yet. So there are some things that are working against us here. So if we used a 5 minute to position, that could bode well for us, like we could have done with the flat top here, right? We could have waited for the 5 minute to position us overbought, right? And so as soon as that next candle came out, oh, that's a 60, sorry. As soon as that next candle came out, so now we're at 57 minutes. So this is the first 5 minutes of that candle. Not overbought, overbought. So as soon as that came out, now we're overbought. Now we'd be able to short or wait for a better position on the 5 minute to try to sell that from under us, right? We've already moved 6 pips in that process, right? So we're already like pretty close to our stop out than we are our take profit. So positioning can bode well for us. But we're going to hold out and leave it alone. Either it's going to hit the 15 pip stop or it's going to hit the 3 pip take profit. So we'll ignore that for a second. Obviously, it was a little reckless. We haven't looked at announcements or anything like that. I'll be honest, I haven't done any trading today. So, all right. So right here, we're going to count on our pattern. to short because that's the nuance that we're picking up 90+% of the time. We know that we could potentially draw down, but we're counting for 25 pips of movement against us in order to justify 5 pips in our favor. And so we think, yeah, we could potentially get that and as part of some of the retrace on resistance. And so we're going to click forward and see what happens. So initially, we actually bust up, right? Look at that, 12.9 pips, right? If we go all the way to resistance, 18.4 pips away, right? We're still looking to try to get out of that 5. We know that we're kind of playing with fire because we played against the trend and because of the other variations within the market. So it's not a bad idea to sometimes play against the trend when you can justify it, but there were some things in here that were like, you know, we haven't made that high yet, where in this case we have made that high now. Now we're on that high, right? We haven't made that high yet, and we just made a low, but it wasn't lower than the previous low, so we're still cycling up. Nonetheless, we said, you know what, we've got the pattern, let's go ahead and go for it. Right now we're still alive, but it's not pretty, right? And that almost looks lucky. That looks really, really, really lucky, right? Or maybe it was just like, well, the market said, well, there was a 4-way, so we probably should give them their trade first before we continue. Yeah, that never happens. Usually it just keeps on going and eats your lunch. So that just looks really lucky to me. I don't know what happened in that situation. It just looks really lucky. But we got our trade, right? We got our 5 pips, and we didn't hit a 25 pip stop out. Ate some dirt for a little while, but took profit, and then it continued long. All right. So would a positioning have helped in this particular situation? Well, yeah, absolutely. You know, a 5-minute positioning, you know, waiting anything beyond that would not have worked out, especially because it posted above that line. You know, maybe looking for a retrace at that point before the push up. But by that point, I mean, the pattern's gone, right? Okay, so, you know, it worked out, but it did seem kind of lucky. Okay. So let's continue forward here. You can see again, you know, minors try to go short, majors continue, even though they're overbought. You can see that recommitment causes for a nice strong move up, even though they're overbought, because strength is to the long side. Dan, you talked about a head fake, but they're not in the flashcards anymore. Is there a reason? They've never been in the flashcards. The head fake, I don't think I ever added them to the flashcards. I think the only thing I have in the flashcards, with some few exceptions, are the patterns that are alerted. So if we go to flashcards, flat tops are alerted, classics are alerted, hydras, gray daggers, duckbills, hiccup patterns, half courts, and 3-pointers. What am I forgetting? Is there anything else that's alerted that is not a flashcard? I don't think so. So we have a lot of the other patterns, just not flashcards for them. So I'll create them. I just haven't gotten to it yet. I'll create them here soon. How's that for a promise? Yeah, soon, right? Are we there yet? Yeah, soon. So does, Brad, I don't know if I answered that question, does trend trump contrary pressure signals? So if the trend is up and I get a contrary pressure signal, I could depends on the situation, right? So let's say that the trend is up and the 60-minute pressure has started to point down, and I've got good signals on major minor. Well, I'm going to take that down for a ride until it's done, because it's likely going to give me some good retracement on the up. So it's just dependent on what you're looking for. If you're looking for a 3-5 pip trade, sometimes just short-term bias in your favor with other indicators is enough to get that against the trend. If you're looking for something bigger, 20 pips or more, you probably want to make sure that you've got room to get it with strong pressure and indicators contrary to contrary to trend direction. So it's all very situational. It just depends on the specific situation, right? Okay. All right, so let's go forward and look for our next example. So here we have major minor crossed, pointed down, overbought in a buy trend on resistance, right? So do we have room? Well, no, because we're only taking 25% of the distance against the trend, and we only have 3 pips. So if we took 25% of 3 pips, it wouldn't be a 3-pip trade. We'd need at least 3 pips to justify taking the trade. Would we take that? Probably not. Doesn't mean it's not going to work out. No, it could still work out, but we may not take it. Let's just see what happens if we go forward. Nope, wouldn't have worked out, at least not yet. 11.2, you'd still be in it, but it wouldn't have worked out yet. And now you're stopped out of it, right? 22 pips. We don't have pressure, so we don't know if it was a classic. They did cross simultaneously, but we don't know if it was a classic because we don't have pressure. Okay. So instead, in a situation like this, right, we could be looking to position long, even on a double cross. I'm just curious. Look at that. Pressure even popped on bottom just barely. And we have a double cross. That would be a classic. And a classic is generally good for 3 pips, but using support and resistance and against the trend, we'd probably say no. Even to the classic that has all the parameters. Pressure still pointed up. Short-term bias to the short side because green popped on bottom. You can barely see it right there. But, again, that's an advanced pattern. It's not a proving ground pattern. And so we would not try to take that very seriously. On the contrary, if we saw cause, and we very well could have seen cause on a 5-minute, we'd go long. And look at that. 5-minute is where? It's oversold. So we'd be looking to go long on that instead of short. Or do nothing, right? That's always an option. Just do nothing because we're not sure. Okay, now if pressure was pointed green on bottom and red on top pointed down like this, Brad, back to your question, and majors and minors across like this, overbought, I would expect more retracement. Not huge retracement, but more retracement. I would expect to be able to get a trade out of that. Maybe a scalp, maybe a little more depending on the market condition. If it's high volume, then, you know, a 10-pip trade. But besides that, you know, you're not going to get much out of that with everything else against you. Okay, let's go to our next example. We said here that we have room up, but we didn't start from the channel and go up. So we're already overbought and we remained overbought. So we're still vastly overbought. Even though we could continue overbought, minors, the majors have to kind of shake the minors, right? Minors have to do something different so that they can create weight going the opposite direction so that majors can pull it in the overall direction, which is the direction they want to go. Now, based on trend, on our support and resistance, we have room 10 pips. We can take 5. Right? We also know that if it gives back, we can potentially draw down 7 to 10 pips. Otherwise, you know, we'd be just looking to go long. So again, we could use our 5-minute. We could position for this line. We could wait for the 5 minutes to oversell, or we could just say go from here. Right? So let's actually bring up the 5-minute this time, and let's look at all options. From here, let's say we're saying, you know what, even if it does draw down, it's probably not going to draw down much more than 10 pips. And I'm only looking for 5 pips. That's a 2-to-1 trade. I'm going to go for it. Or you might say, you know what, I'm going to try to go for more than 5 pips. And if I can get to this line and go up, then I can justify like 8 or 10 pips, right? Because it's about 17 to 20 pips away, right? Or you could say, I'm just going to wait for the 5 minutes to oversell. Once the 5 minutes oversold, then I'll go ahead and enter wherever that is, and then I'll take 50% of that distance. So wherever I get in with the 5 minute, I'm going to take 50% of where the 5 minute puts me in to resistance unless I run out of space. In other words, if the 5 minute doesn't position me and it just keeps on going up and it touches that line, or by the time it gets oversold, it's already too close to that line that there's not at least 3 pips, then I do nothing. So let's start with the 5 minute because that's the one that we would look at first. Otherwise, we could just click forward and see how if the 5 minute would have worked in our favor. Wait for it to oversell before we execute. So not oversold. There's 5 minutes, 10 minutes. We may have been, no, probably not. Black probably didn't get all the way oversold during that shadow right there. You know, kind of. So let's wait for the oversell. 15, still not oversold. 20, not oversold. 25, 30, 35, 40. That may have been oversold when that was down. Let's wait for one more. 45. That was definitely oversold when it started. So we'll start from there. And we're waiting for, so this price would have been, so as soon as the next candle came out, these lines extend and they're oversold. So we're just going to start from here. That means that our entry would be 1.11538. So 1.11538. Look at that, right where it ended anyways, right? And then let me make that a dashed line. I'll just make it pink. Okay. So 538, so we'd be going to 1.11568 for 3 pips. Or no, we said 50% of whatever that was, so it would have been 5 pips. So 588, and which means we'd have to move to like 600, because 588 plus 1.2 of spread is about 600. If we position with the 5 minute, would not have done us very much, right? So let's see if we move our 5 pips from that position. So initially move 1.1, then 1.3, then draw down 7.8, all the way to 9.6 pips drawdown, which we kind of expected, right? 2.6 pips profit there, and 3.9 profit. We know we took profit because we can see this candle now that's posted, and there's 8.4. So we took profit after we drew down. So even the positioning really didn't help us on the 5. Nonetheless, it didn't hurt us either. With the positioning to this level, for those that said, well, let's wait for the pullback to the support level and then go long, yeah, that would have been money. Your drawdown would have been about 1.8 pips, and then you would have been, we said, out of 20, we could take 10, you would have been out almost immediately. So there's 11.3 right there. That would be enough to get out. If that wasn't enough, that one went 16.4 and so on. So right here, we had double cross short, green on bottom, short-term bias to the short side, and major minor double crossed together short, right? Green on bottom. A little bit of divergence, red candle on resistance. So again, we posted above support or above resistance and then used it as support, so we can see we're validating the line altogether. So here we would expect that this level, after breaking above it, we would not continue. We would instead come down. And if we were going to come down, if we measured to there, there's not enough room to take a trade. So if we measured to there, there's about 17, 18 pips. So about 4.5 pips, 4.25 pips of profit. We would not take that, right? Against the trend beyond resistance or beyond support, we would just leave it alone, right? There's just not a lot of strength there. If we're still getting good vibes to the long side, then we'd probably want to look more seriously at that, especially because, again, our 5 minute is oversold against the against the trend. So we're really expecting for a 5 minute to give us 4 or 5 pips of movement after it's already oversold. Maybe if we but then if we did position, it would bring us away from support, giving us another chance to test support. But to try to take it there would be reckless, just based on some of these other things, right? Even though it would be a classic, you would get an alert that would say this is a classic, and it would not have. Well, let's see if it would have worked out. 3.4, not enough. 9.7 and 14.7, and so almost a stop out. So we'll check it here in just a second, because we've got another line that was hit right here. Again, we didn't start from the channel, so we didn't go all the way into the channel and then push up, right? We were overbought and we remained overbought. And a lot of times you're going to have to give some of that back. Now, are we going to give back 14 pips or, to try to get out of that 16 pips? Not likely, right? Maybe 5 or 6 pips, but more than likely still continue to the next level of resistance. But do we have room between our current market price and resistance, even at 50% with the trend, to justify taking the trade based on this pattern? No, we don't. We either have to wait for some pullback and then try to take it from someplace shorter for maybe a quick 5 pip scalp before we get to resistance, or not do anything at all. So let's look at taking it back first. So we'll look at taking it back to this level, and I just kind of randomly picked this level. So I'm going to make that pink. There's my pending trade. Or we can position with the 5-minute, wait for the 5 minutes to get oversold, and then buy. And then buy for half the distance if there's at least 3 pips from where the 5-minute oversells. So let's try that. 5 minutes not oversold yet. There's 5 minutes, 10, 15, 20, 25, 30, 35, 40, 45, 50. The reason I'm counting is because you want it to happen within the hour. Otherwise, it doesn't count, right? Because you have to reevaluate the 60-minute indicator. So 55, 60. So never got oversold. Maybe there, but at that point, maybe too late, right? So 5-minute positioning probably wouldn't have helped us out very much, right? Now, if we entered, how did I go so far? Let's see. Oh, that's why, because I'm not back here. Oh, right. So we said if we came back to this line, then we would enter. Otherwise, there's no justification. We can't justify it. There's not enough room. Even if it does go, we just can't justify it, right? So we either have to come back to this pink line and then enter, or wait for the 5 minutes to oversell. So 5-minute did not oversell, nor did we come back, so we'd have missed it altogether. Even though it moved to 11.3, it's not that we missed it, it's just we didn't see what we needed in order to justify taking it, right? And that's okay. All right, so did it go by? Yeah, it went by, but we didn't justify it, so we didn't take it. All right, now we got that cross short on resistance. Excuse me. On resistance, coming back, 25% of the distance between there and there, 15, so 16, so 4 pips potentially. Short-term bias in our favor, major, minor, both cross, so let's see if it works out, right? Did we have other forms of validation just to justify taking that against the trend? Yeah, majors and minors were okay. We had technical analysis saying we just rejected on price, and we could potentially still see some more retracement, and we had room between resistance and support. So we used our other disciplines to say, yeah, we could take this if we wanted it, but let's be conservative. And we would have got our 4. Even though it moved 10, all we were looking for was 4. Right? So you guys understand how these things are playing together, how the major, minor, and just major, minor. I mean, we are kind of glancing at pressure now, and levels of support and resistance are playing off of each other to justify or invalidate a trade, right? And it's kept us pretty safe for the most part, right? And even all of this is not, you're not going to be right all the time. And again, you have to be okay with that. Is there a certain way you draw your support and resistance? Yes, Michael. Review last Wednesday's the Proving Ground review. It's the last video, the most recent that's posted up towards the top of the. Here, I'll just pull it up here. So it should be. Where is it? Because that was the latest. Unless I haven't uploaded it. Sorry about that if I haven't. Perfect Storm half-top Q&A. Man, maybe I haven't loaded it yet. I apologize, guys. I'm a video behind. I didn't even realize it. Michael, you're never going to be supremely confident in your support and resistance. You won't be. Wherever you see levels of support and resistance, draw them in. Make sure that you have at least 10 to 30 pips of separation. So in other words, if you catch a bounce on support and resistance like this, you want to make sure it's at least a 10 pip bounce. Right? Otherwise, don't even draw the line there. And make sure that if a candle remains above a level of resistance, that it continues to the next level of resistance before any other candle posts below that with body. Wick doesn't count, so that doesn't count. If the body remains below that, then I'm probably missing a line somewhere in here. Otherwise, I want to see it post above and then continue to the next level. And there it is. Right? And if it posts above that, then I want to continue to that level before it remains below this level. And that's it. Those are the only stipulations for me with regard to support and resistance. Okay, so there we're looking for a sell. And we got our sell there. And then a quick flip back after the sell. Double crossed long with trend on resistance. And this is now the second time that we caught resistance. Is there any justification that we can use here? Yes. Right? Because we had up, down, higher than the previous down, up, higher than the previous high, down, higher than the previous down, up, higher than the previous high, down, higher than the previous low. Now we're looking for a high, a previous high. We are on resistance, but we're looking for a previous high. So we could say, well, let's not because we're on resistance and wait till it breaks above and posts and then possibly get some follow-up there. Or say, you know, with the trend and the ebb and flow, we are justified in taking another long. And if that's the case, we would be only taking about 6 pips of that, right? And being very, very careful because if it does retrace, we know that we can go up to 20 pips against. So if we're using, you know, a 3-to-1, we're only able to justify maybe 18 of those pips with a 6 pip take profit. Otherwise, we have to take more profit, in which case we would position. But let's look at it from all angles. Either we wait for some pullback, maybe oversell in the 5-minute, or we execute right away, or we do nothing. Those are the only options, really, because there aren't any obvious levels of support and resistance that we could reasonably wait for. Here, we would expect for this to double back down, come back, and possibly start changing the trend direction because it's making a new low without making the new high, or just consolidating. And in both of those scenarios, it's not good for trying to get out of that long trade without having to go really far to the right and take a really long time. So either we position with the 5-minute or we just say, let's go for our 6 right away. So 5-minute, let's look at that one first again. 5, 10, 15, 20, 25. There's the oversell. And then from here, 11645, I think is pretty close to where we started anyways. So 11645 is actually higher than if we just got in to begin with. Pink. And then we're looking for 5 pips from that point or 6 pips from this point. So 5 or 1 from there. Actually, we have to track it from here. Let's see if we draw down 5, 10, 15, 20, 25. Yep, 7.1, 30, 35. 11.1, 8, there's 13.6. Still upside down. Still. This one should stop us because of that right there. Okay. Yep, so that would have been a loser, right? So from entry here, right off the bat, we would have got our trade for 6 pips. Position with the 5-minute would not have worked in our favor. Doing nothing, well, you know, nothing ventured, nothing gained, but you didn't lose anything either, right? So entering right off the bat would have been good. And sometimes it's like, you know what, I'm not sure about it, so I'm going to position with the 5-minute. And you position with the 5-minute, and still it doesn't work out. Or you try to position with the 5-minute, and you miss your position. Right? So a lot of this stuff happens really often when we're trying to execute in the market, and we just need to keep our composure and continue with what we've planned to do to begin with. Don't change it just because it didn't work out a couple of times. If you're not certain and your default is always to position with the 5-minute, and the last 3 times it didn't work out because one of the times you missed your position and 2 of the times even after positioning you still failed the trade, doesn't mean you should just scrap it and not do it anymore, right? If you realize by back testing and front testing and everything in between that it's not a sound approach, then ditch it or figure out how to do it better. But don't utilize it in your real live account with real money until you've proven it out to yourself, until you can see it and you understand it. Not that it's explained to you, but that you have some wisdom behind you, right? Okay. So here we were talking about soft up, right? And this is kind of that head fake scenario, but it's not a head fake because green is touching red. Nonetheless, even though it's not a head fake scenario, if it reacts like it does because it's close enough, right? Because we have a contrary candle, we have pressure short-term bias to short side, minors are all the way in the channel, majors are hung back. So a minor technicality right here nullifies the pattern. Minor technicality. So it's still likely, the principle still exists. So if it shorts, then we'd be looking to pick up the long after the short. Nonetheless, if we're looking at this reactively, then we'd try to justify a long trade. There's only 3 pips, so we would not try to justify that long trade because there's not enough room to justify it, right? But we're not going to short either because we're new and we're not really familiar with this quite yet, this whole scenario quite yet. Not to beat a dead horse, but I'm not clear yet. The last suggested trade, you went against trend and against pressure, but the majors and minors and support resistance were favorable. Can you just review that part? Yeah, absolutely. So you were talking about this one, I believe, right? So we're not against pressure because we do have divergence and short-term bias to the short side. So pressure pointing up means squat to me sometimes. It means nothing. When you learn to read pressure, you learn to read it beyond just the direction it's pointed. Other times, it means everything. The way it's pointed means everything. Sometimes it means little. Now, what do I have that's in favor of shorting at this particular place? Well, one, I have resistance, and I just bounced on resistance not once but twice, and I failed to make the high after resistance, right? 2, I have a double cross overbought on major minor. 3, I have pressure, short-term bias to short side, and divergent. And I'm only looking for small retracement, which was 4 pips. So I could skip it, and I could say, no, not gonna justify it. But I have room, I have signals, and I have more than, and I have a technical that's giving me the lead in. And if I wanted to be really specific, I could also use the fact that I did not get a high on this candle before it pulled back on resistance. So I don't know if you guys have ever seen Jones Fangs, But Jones Fangs is something that Kevin Jones Sr. used to use just to kind of show a range as it compares from one candle to the next to try to project what's going to happen on the next candle. It's not an exact science. And matter of fact, sometimes it just doesn't work the way you think it's going to, but it's fun to look at. So you take the high of this candle and use a parallel raise tool, high of this candle, the high of that candle, and then this other end right here, you put it to the bottom of that first candle, to the low. And then you take the low of this candle to the low of that candle, and then you take the other end and you put it to the high. So it shows, we see a sideways, right? We have some up and some down movement, right? Well, if we get sideways of this one, we're only likely to get to resistance or maybe back to somewhere in this range, right? As that rays down, that'll ray down, so it'll be lower, right? It'll be like somewhere, in here, in this range right here, because when I click forward, this is going to ray down, right? It'll be somewhere in there. So even if I did draw down, it wouldn't be very much drawdown, and then continuation short. So I have cause on a technical candlestick indicator to short, but I know it can't be a very aggressive short because I'm against the trend. But I know I can get it. So if we looked at those rays again, we can see that this down from here to there, and it actually broke out of that, did encompass that movement, right? So in areas where it wouldn't be effective is like this. So here, the bottom cuts off that candle, so I'd actually move it to there. And then this bottom to that bottom, and then to this high cuts off that candle, so I'd move it to there. You see very steep, down, 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 right? And then I have about 6.4 pips. So even though I've got resistance, I've got the Jones Fangs, I've got a double cross that's halfway oversold, I only have 6.4, 6.5 pips of movement against the trend, which I can only take 25% of, which would put me at about less than 2 pips, right? So I wouldn't take that trade. Even though I've got justification, I don't have room to take it, and it's against the trend. So now a lot of stuff that was boding well for me here is not boding well for me here. Major, minor, close and tight, pointed down. They're kind of almost oversold a little bit. I do still have room, but I just don't have enough room, and I did bang on resistance again. But here, again, because I'm against the trend, I've already used up some of that down movement. I'm not certain. I don't think that I'm going to get to this level, mainly because of the ebb and flow of the market, right? So if I'm uptrending, then I've got a high, a low, a high, a low, a high, a low, a high, a low, and the lows have to be higher than the previous lows. If I came all the way back to here, I could very well create a new low, which would start to change the trend or consolidate the market. And since I don't think that's going to happen quite yet, I'm not putting my weight on pushing the short direction. So again, I'm taking into account all of these things. Did it move short? Yeah, 1.7 pips, and then went back. So against the trend, it wasn't against pressure. We still had short-term bias to the short side, but in that case, we had overbought, major, minor, pointed down, short-term bias to the short side, bounced on resistance, and a candlestick that failed to make a high. That candlestick is always going to be last because it matters very little unless it's just an additional form of validation. Now, in situations like this, you may very well just say, well, I'm not going to short, I'm just going to go long. And you might be okay doing that, right? Or position with a 5-minute as aggressively as possible, wait for it to oversell, and then go long. And disregard the short all the time, but don't be afraid to take a short or just be so convinced that the market's just going to continue long that you don't trade short, and then when the market does short against your position, you start doubling down, thinking, well, now it's going to recover. Okay, now it's going to recover. Right? You always got to be aware that the market's going to do whatever it wants. Right here, regardless of what it has or hasn't done, it could shoot down 100 pips and disregard everything we've just done, all the analysis we've just had. Just disregard it as if it didn't even exist. Okay, so let's get back to where we were, which was here, right? Almost that head fake type scenario. We weren't trying to take the long directionally with major minor, using them reactively. Pressure short-term bias against. Again, this is almost a head fake scenario except for that small inconvenience right there. And that's enough to nullify the pattern. However, if the follow-up is present, then usually we're going to get the desired result, which is long for at least 3 pips. So here we said long, we marked it long even though we knew that there was kind of the head fake scenario, and we got nothing to the long side. And it's in the uptrend, but we got nothing, right? And a lot of times we may very well take a long in this situation, even me, because the trend. Maybe not here because of pressure and stuff like that. But if I was looking at just major and minor, that may have caught me. Because I'd say, okay, well, I'm still likely to go at least, well, I guess not. There's only about 3 pips. So no, I probably wouldn't have. But let's say there was more room. Let's say there was like 10 pips. I'm like, yeah, I could probably get 5 out of that first. And then it'll pull down. And then it could possibly pull down, right? And end up biting off more than I could chew and end up having a hedge or something. It happens, even to us, right? Those of us that have been doing it for a long time. It's okay. Just plan for it and execute when the time comes. Now here, we did break support, broke through support, did not continue, and we only have about 1.2, 1.3 pips to resistance. So if we played back into that, we know that it might be short-lived, right? But nonetheless, we still have good odds in our favor that we could at least get 3 pips long, and that's why we have a green line there. Right, and let's see, erase drawing, and 1 pip. It only moved 6.6 against, so we're still in it, but it definitely didn't give us our 3. And neither did that, and that would have stopped us out for sure. Now keep in mind that this is likely something emotional in the market, right? So if we're looking at 4 in May, what is that, guys? Somebody give me the calculation there. What about some of the masterminds that go against the trend? That's pattern-based. So the mastermind patterns, these are pattern-based that go against the trend. I'm not suggesting always trade at the trend. On the contrary, I'm suggesting when time comes, trade against the trend, and you don't always have to trade with the trend. But the patterns are proven out against and in favor of the trend. They're proven out 90+%. So it's just how they are. So it's a pattern-based trade, and you're not expecting the market to flip and start going the opposite direction. You're just expecting for it to give you that amount of pips before continuing or going too far against. So it's a 5-to-1. So in other words, the flat top that we just took, right? Did it come out? Oh, it stopped me out. Ha! Look at that. I got stopped out of that flat. Just barely after it stopped me out, it pulled back a little bit. That's how it goes. So the flat top that we just took, or any flat top for that matter, they can come back, give you your profit, and then continue and go 100 pips against. All you're counting on is that small pullback. In this case, it didn't really pan out for us. 14, actually it stopped. This one stopped me, even though it only moved 14 on green chart, but it stopped me. And it could still very well come back and give it to us, right? We mentioned that these straight lines in major and minor, that's when I don't like taking them. I like it better when there's some give in the majors, preferably when the miners are plateaued up top, not just kind of bent. So they've been overbought, or they're already starting to soften overbought. Otherwise, you see that there'll still be some strength in that direction, and that worked out to be the case here, just enough to stop us. I mean, that moved 14. So from where, and I got in on this candle here, so about 8 seconds after the post. So even that wasn't enough. But in these scenarios, all we're looking for is that quick give back, and then it can do whatever it wants after that. But if you're using other disciplines, then you're saying, okay, I'm with the trend, and I got a flat top. I'm not going to just take 3 pips, and I have room on resistance and support. I'm not just going to take 3 pips. I'm going to take 5 or 10 or whatever you can justify using those other disciplines, right? And that's how it's most effective. And there are going to be situations where they're against the trend, and you decide, look, it's against the trend. There's these other factors. It's on resistance. I'm just going to sit it out. And it'll go both ways. Sometimes it'll work out, and other times it wouldn't have. But the question you have to ask yourself is, does the math work out? In that situation, if I did that most of the time, if I decided not to trade this pattern against the trend, is that going to be favorable for me? Is it going to be profitable for me? In most cases, it will be, but there will be some situations where you'll miss trades that you could have otherwise taken and made profit because it's against the trend. And in those situations, it may not be more profitable for you. Is it safer? Yeah, but even then, you're still not 100% that you're going to get that trade every single time. So there's still risk of loss. And now you're cutting down the amount of trades that you're taking because you're only taking them with or with the trend. And so sometimes that math just doesn't work out. With advanced patterns, it's almost implied that you need to take it with other disciplines. You don't want to not take it with other disciplines. You want to make sure that you're using some other technical or other analysis to justify taking, say, for example, a three-pointer, and not just take it for the mere fact that it's a three-pointer. You're welcome, Michael. I hope that answered your question. Okay, so look at that. Even that one didn't work out. The give back just didn't work out. Could there have been announcements or something like that? Possibly. I don't know. I'm not going to check. I was going to, but I'm not going to worry about it right now. But we can see that these candles, that from low to high is 21, and then this one all together is 22. So something happened. Market open, announcement, something kicked the market in gear and pushed it in one direction and continued it, right? I think that's some pretty strong moves all of a sudden. Okay. So let's go to, now we've got kind of that double cross pointed up. Let's eliminate some of these other things because we weren't looking at pressure and TNTs before. It's kind of cheating because we weren't looking at them when we were just looking at TNTs or looking at pressure, and so now we have them. Let's just get rid of them. We're just going to look at major minor. Okay, so we are oversold, crossed up. Are we still in a long trend? We did make the high, but now we have a low that's lower than the previous low. So we could start to see some consolidation. It doesn't mean that we're going to start flipping, but we could start to see some consolidation. Right? Okay. So right here we've got a double cross long. We have room. We're still calling this long because we haven't broken out of the long trend quite yet. We're more in consolidation than anything. About 13.3 pips. So if we took 50% of that, we're looking at about 6.5. Let's just call it 6 pips to the long side with this double cross. If we feel like that can give it to us, then we execute. We got a lot of pullback on that initial move up. A lot of pullback, and that might be concerning. If we draw down and go beyond our next level of support just below us, we have about 20 pips of fall, and we're only taking about 12 or 13 pips. So, sorry, 6 pips. So 6 with a 20 pip or more stop or hedge or beyond 20 pip hedge, we're looking at, even with a 24 pip hedge, we're looking at a 4-to-1 trade. So we need to be 90+% certain that this is going to give us what we're looking for, which is 6 pips. And that's how you can start looking at it when you start figuring out the math. Well, my drawdown as it compares to my risk or my profit doesn't make sense based on just this little soft pattern right here, especially because majors already crossed, then minors. Usually that's a soft sign, right? I haven't really moved very much. We did get a nice swing up and then a pull back down. So we marked it, so let's go for it. We're gonna go for 6, right? And we would have got it just fine. 12.4, but then it pulled back. Okay, let's go to our next one. More of a bootleg scenario. We did bounce on support. We have about 11 pips, so let's say 5 pips to the long side, kind of on this bootleg type scenario. Green is major minors are up, and majors are up, minors are down, and we've got this little bubble right here. So a lot of times we'll pull up, minors will follow because they snap their backs trying to go short, and that'll give us the push that we need. So we've got 11 with potential drawdown of maybe 15 pips or so. So 5 to, it's a 3-to-1 trade. And we're golden, right? We got it. 18 pips to the long side, and it broke resistance. Look at that. Broke up and then broke back down. So there's probably a level there that we don't have. Okay. Do you guys have any questions about this? I hope that I realize that it gets really complicated with the majors and minors because there's so much nuance, and also they just work so well with other indicators, not always by themselves. But it's difficult. I struggle explaining major and minor to you guys alone without patterns or other points of reference because they're so nuanced to me. Everything about the major and minor are just so nuanced, and I've just learned to read them really well. But I don't expect that you guys would be able to do that right off the bat. So the way you get there is by replaying your charts, right? Going back historically, replaying your charts, and seeing, for example, how is it that this went from here to this pattern, and what did it look like throughout that process? Because I bet at one point majors are probably overbought on this candle as this wick happened, right? So I'll show you an example. But you wouldn't know or see that unless you replayed the chart. So, yes. There it is, right? As that green, or as that red wick happened, they were already kind of overbought and possibly stretched overbought. So let's speed this up a little bit. Right, look at that. So while you're watching that, that looks more favorable buy while you're watching it. And then look what happens before that candle ends. And this is where some of you guys find yourselves getting in trouble. Right? Look at that. Pulls all the way back in the opposite direction. And again, it could be announced, it could be something else, but I mean, that stuff happens normally. That's pretty standard stuff, right? Okay. Oh, awesome. Thank you, Brad. I'm glad that it resonated. And that's, you know, man, I don't know why. It's just always a struggle for me to kind of explain some of these things with the majors and minors because of their nuances. And I'm always cautious as to the information that I give you guys because I don't want you guys to think that if I teach you something, I don't want you to think that you can just automatically go into the market with it and use it. I mean, you can practice it and make it your own and then start utilizing it if it fits with, you know, your trading strategy and what have you. But to try to take something that, especially something as in-depth as this, and just try to execute it in the market right away is going to get you in trouble. So more than anything, what I'm trying to do is give you clues. I'm trying to drop breadcrumbs so that you guys can gain wisdom. I can't impart wisdom onto you. I can impart knowledge. I can teach you guys something. I can drop the breadcrumbs, leave a clear trail for you guys to follow, but ultimately you have to follow. You have to experience it, and you have to understand it through your own eyes in order to execute it proficiently. How often do I reset and redraw my support and resistance? Michael, sometimes I'll draw them out for the week and then just adjust them as the week goes. So, for example, with the support and resistance we have here, if I had drawn this previously, then like let's just say that this is our week, and I just woke up and I'm looking at my indicators and I'm looking at my charts, then I would go back and make sure, okay, this block right here, I was sleeping, so let me just make sure that it all adheres to, the levels of support or resistance that, or the rules for support or resistance, meaning if this breaks above that line like it did right there, then I expect it to go to there, right? And it doesn't. Therefore, I either have to adjust a line or I have to add a line. Do I have room to add a line if I want 10 to 30 pips of separation? I have 15.5, no, because if I put a line anywhere in between there, I'm not going to have 10 pips in one direction or another. So what if I added a line there and then eliminated this line? Erase. Would that work? And the answer is no, because of this level right here. That broke and did not continue, right? So how about adding a line like this, let's say right there, and then I'd have to have that right there, right? And that's not 10 to 15, that's only 5. So erase that, erase that. What if I just did that? Does that work? Yeah, that's 33 pips. I want 10 to 30 pips of separation. So I could just eliminate both of those lines and just have this big open space right here. And then as I go forward, make additional adjustments, right? So here, I broke and didn't continue. Can I adjust this one up? If I do I still have 10 pips separation? Yep, on the money. Do I have more than 30 here? Nope, 21. Does it infringe on anything else historically? Nope, I'm good, because that did not break below that line. When it did, it continued, so on and so forth. This now has to go up to that line, otherwise there may be another level of support or resistance that I'm missing there, right? So it didn't, right? So do I have to add a line somewhere in here again? Maybe there, which we decided can't because of this and that. Put it a little bit lower. Could possibly have something there, but again, I've got only 16 pips here. Can I increase this one up and then have 17? But then if I do that and I put this line here, I don't have 10 here. I have about 7.9, 8 pips, 9.9 there. So here, can I erase this line altogether? Oops. And does that work? No, because of that, right? And so now we're back in the same problem. And sometimes that just becomes the issue with a 60-minute, which is why I like drawing on a 240-minute. But other times it's like, okay, well, let's just take the most relevant line. Adjust. Does that one work better or does that one work better? This one covers this and all of this and a big old bounce and this right here, where if I adjust it down, this covers, leaves that exposed and covers everything that the other one covered as well. But this is more relevant. This is more. This is closer to, excuse me, what time it is now, versus this, which is further back. So inevitably, what you do is you decide which level is going to be most advantageous to you, and then use that level as your form of validation. And then continually check it, right? So those levels worked out. Those are working out good. That one didn't. Might have to adjust down a little bit, right? But if we adjust down, we start missing that level, so on and so forth. Excuse me. So on and so forth and so on. So you just got to decide which levels are going to work best. 60-minute, it does get kind of choppy. And if it gets too convoluted, then I'll erase all my lines and redo them. But usually it's about once a week, except for if I've gone a couple days without looking at the market, then I'll just erase them and start over again. But if I look at the market every day, I'm just adjusting lines versus drawing them in But Sunday, I'll always erase and restart just because I don't want to get stuck in my box of thinking. I just want to kind of wipe the slate and start over. So that's kind of my approach. I hope that helps. All right. Awesome. Awesome, Brad. That's the idea, man. That's the idea. I appreciate it. Take these breadcrumbs. Brad was just saying that now he's able to see things that he didn't see, which will produce more questions, but residually create more learning, which is the idea. I always want to push you guys to more education. There's no shortcuts in this game. I was just talking to somebody earlier, and I told him if it's easy, it probably doesn't work. If it's easy in this game, it probably doesn't work. It can be simple, right? Patterns are simple, but they're nuanced. So they're not easy. They're simple, but they're not easy. Trading is not easy. It's simple. It's just not easy, right? And that's the difference. All right, guys, I'm going to end with that. I appreciate you guys hanging out with me for a couple hours today. We'll be talking tomorrow on the Proving Ground review. If you guys have any questions in the meantime, feel free to reach out. And besides that, we'll look forward to seeing you guys tomorrow. Have a good one. Thanks, guys.